blockchain. Things are about to change. Open up the gates. Systems get replaced. Bitcoin, decentralize the trust. Security, transparency. The network's run by us. Bitcoin.
Hello and welcome to the Bitcoin.com podcast. This is your host, Zach Doty. We have Alex Sonnenborg here today from Lawnmower. Alex, welcome to the show.
Thanks, man. Pleasure to be here.
So tell us about your product. Lawnmower started out as a wallet that would round up to the next dollar and buy Bitcoins whenever you spent money on your credit card or debit card. Tell us about the evolution of your product and where you guys are at with that.
Sure. So me and my two fellow co-founders started Lawnmower at the very start of 2015. We're all from Florida. We all three quit our jobs and moved out to San Francisco. Shortly after that, we got into the Boost VC Accelerator in San Mateo, run by the Draper family. Our kind of cohort or class or whatever you want to call it consisted of 25 Bitcoin only companies, so pretty big batch. Like you said, the first iteration of our product was called Spare Change into Bitcoin, kind of based off the Bank of America product that Acorns also did. Basically, you would go to, or you'd link a credit or debit card up to our app. Then you'd go to a store like, say, Starbucks, spend $3.25 on something. We'd automatically round all of your purchases up to the next dollar. So that $3.25 would become basically $4. We would take that 75 cents differential and automatically buy Bitcoin with that. This was kind of just an easy way to sort of automatically buy Bitcoin over time, kind of dollar cost average in, and connect it to your spending habits. We also had a spare change multiplier, so you could kind of tweak on the fly exactly how much you were saving. So we ran that program. A lot of that had to do with making a partnership with Coinbase, who we were introduced through Adam Draper at Boost VC. We actually worked about one day a week from Coinbase's office throughout 2015. They really helped us get our onboarding and whole app very smooth. So basically, yeah, we ran that product, built it out, built a lot of features, expanded our banking support, expanded our analytics, worked on the UI several times. We got towards the end of the year and we started thinking, hey, we just want to go broader than this. This is a really cool product and people really like it, but we want to kind of go from being just spare change into Bitcoin to really being this larger and broader investment hub for the entire crypto world. So kind of we started deciding, hey, it's not just Bitcoin anymore, especially given the timing. You know, Ether's on a huge tear, Ripple has traction. There's a bunch of other blockchain assets out there that are really exciting too. I mean, stuff being on top of Ethereum, being built on top of Ethereum is extremely exciting. Some of the crowdfundings have been absolutely huge. I mean, you had the DAO not too long ago, which is just massive and a crazy story. Cool projects like Augur, Digix, just all these other projects being built on top of Ethereum was kind of exciting to us. So we were like, hey, we really need to, broaden out our product and kind of be this platform for the whole space. So now we're kind of going towards, providing a bunch of market research, a bunch of data and kind of almost equity research-esque reports, just really trying to educate the public on, what these assets are, how you can invest in them, what's the overall industry look like, and kind of continuing to kind of have a recurring purchase feature for that dollar cost averaging, but this time it's just more granular and flexible. So you can just decide, hey, I want to invest, $15 a week or $40 a month into Bitcoin, and we'll just do that on a recurring basis. And now we also have an instant buy and sell feature. So before it was just purely spare change, driving how much you could invest in. Now it's just really, more customizable. You can buy whenever you want, sell whenever you want, and then set up these recurring purchases in the background. We have some cool analytics that'll be on top of your account showing you your performance. We also have devised this index called basically like the Lawnmower Blockchain Index, which is this market cap weighted index of the top assets to kind of just let you track and see over time how the space is kind of evolving. So right now, it's about 80%, I think, Bitcoin. We've got some Ether in there, Ripple, Litecoin, and just kind of all these others as they shift throughout the months and make that minimum criteria. So we really did a lot of UI updates as well in this recent update of ours. So it's looking pretty clean. What we really want to be is just this, take a user from, or a prospective customer or what have you, from reading the word blockchain in a big newspaper or across the media as it's, extremely hype right now, and just showing them, okay, this is what it's all about. Here's some information and education. You can link your normal bank account, some exchanges to trade other cryptocurrencies. You can like only deposit Bitcoin to trade and not use your bank account. And we think that's a huge barrier for getting people to invest. We'll automatically create you these wallets. We'll make trading as easy as possible. And we'll kind of set the whole thing up with a very familiar feel to a traditional investment app like, say, Robinhood. So we're just trying to be this as consumer friendly, mass market, really easy hub for both information and investment tools for the whole asset class.
Awesome. So yeah, the mass market person isn't a trader. They're not trying to time their investments as much as they're trying to let time make their investments, right? It's more about the time than the timing. And so for the non-sophisticated or for the mass market investor, dollar cost averaging, or DCA as it's usually called, is great. Basically, the long story short is if you had invested $10 a month over any long period of time in Bitcoin, that would have gotten some pretty good results. Over the last 1 year, you would have invested $120, for example, $10 a month. And at current prices, that would be worth about $234. So that 120 doubling into 234. If you had invested $10 a month, say over the past 2 years, you would have spent $240. And that would be worth $500. If you had invested $10 a month over the last 3 years, you would have spent $360, which would be worth $844. 4 years, you would have spent $480, which would be worth $5,354. Over 5 years, you would have spent $600, and that dollar cost average investment would now be worth $23,600. And over 6 years, if you had been doing $10 a month, you would have invested a total of $720, which would currently be worth $475,000, nearly $500,000. And so, that's just dollar cost averaging. It's a great way to get into an asset that's volatile like Bitcoin, and all of these other cryptocurrencies are even more volatile than Bitcoin. So, I think that's a fantastic way for somebody who is just getting initiated into the crypto world to start to set up a recurring buy for $5 or $10 a week, and just to kind of get a little bit of experience using and trying Bitcoin, and a little savings account going that's just going to grow over time. It's like the richest man in Babylon's way to grow wealth is save consistently and do it over a long period of time. And if you do that in Bitcoin, it might work out well for you. So tell us, what does the average person save or buy per week or per month on your platform? What kind of buying behaviors are you seeing?
Yeah, actually, part of that trying to drive our volume up a bit occurred when we shifted from spare change to this more flexible program. So probably about 6 months ago during our spare change program, people were saving about an average of $30 a month. Right now, that's closer to about $70 a month. And what we've seen is that a lot of people's manual purchases, these instant buys and sells, are actually a lot larger than their recurring purchases. So like you're saying, the recurring purchase, for just passive investment, like you're saying, our app isn't, really for these really active day traders. We don't hit you with candle bar charts and you needing to put in, limit orders or more advanced orders. Yeah, we're really for that more long-term strategy. But, the manual buy data does show, which kind of makes sense. If someone's going to sell, it's probably because they're spooked at the market or think it's, too high, and they're probably going to liquidate a lot. Kind of similarly with the instant buy, if they think it's a really good time, they're probably going to put in a large trade. But in the background, a huge percentage of our user base is just investing. I think the most common number is $15 a week, or just like you're saying, this really more long-term, just, hey, I want to start saving Bitcoin. I like this asset. If I look at an all-time price chart or try and guess on price movement, I'm probably going to get slaughtered, or there's just a lot going on. It's a really hard game to get into. The kind of easier, safer strategy is to just kind of slowly save as much as you can and into Bitcoin just as much as, you're comfortable with as an overall piece of your portfolio. This kind of saving a fixed amount over time, this dollar cost averaging strategy, is really what most people do with like their 401k plans. So, every 2 weeks you get your paycheck, a percentage of that goes into, stocks in your 401k. And then, a lot of our users just kind of use that similar schedule to just go ahead and time their Bitcoin investments with a smaller percentage of their portfolio.
Cool. I think it's a great tool for the average user. By the way, what's your user growth looking like these days? And I imagine there's even more interest now that it's not just the spare change being rounded up, but it's it's a really good tool for dollar cost averaging your way into any crypto asset.
Totally. Yeah, our user numbers have been growing pretty steadily, and definitely in the last year as the price has gone. I think when we launched our app, the price of Bitcoin was $230. And now at 600, like our average customer is just up a massive amount. I mean, easily 50% returns plus. So user growth has been good. When we did take away spare change, I will say a lot of users did really like the spare change program, so they were sad to see it go, and we had a pretty big drop off. As we continue to make the next version of our app pretty nice and continue to add these features and research and stuff, we've seen a lot of users that have come back or given us a second chance, or just new users that come in through, just every time the word blockchain's in the media, it just continues to spread the word about Bitcoin. People obviously kind of investing in it is the only way you can really get exposure to the space. So our user growth has been pretty steady, slight drop off in spare change, but we're trying to win all those users back by saying, hey, spare change was just an automated way to buy Bitcoin. We still have that. Plus, our app is just getting better over time. So, nothing's changed. We're still focused on making crypto easy.
Cool. Tell us about the accelerators you've been through. So you went to Boost VC. I was down 2 weeks ago and had a face-to-face with Adam Draper there at Boost. You guys were there for a bit, and now you're at the Startup Bootcamp FinTech in New York. Tell us about your experience with accelerators, and would you recommend them to other startups? What value did you get out of them, and what do you think of the ones that you've been through?
Yeah, totally. So I guess like I was saying, me and my two fellow co-founders, we're all from Florida. We're pretty young. We were 23 when we founded this. So we didn't really have a huge network in terms of, basically we didn't really know any investors. We didn't have any connections with media players. We didn't know anyone at any of these Bitcoin exchanges we were trying to partner with. We just didn't have a lot of credibility. So when we decided, hey, number one, we can't be in Florida. There's no tech and finance scene here. We need to go to San Francisco. That's where Bitcoin's at. So we decided, let's just buy one-way tickets and figure it out. And that's when we kind of got a chance to go to Boost and really see like, oh my God, this class, they're trying to recruit 25 Bitcoin startups, which was like a huge number to us. We're like, man, are there even like that many Bitcoin companies? And especially at this stage. So just immediately when we got into that and, met 25 other companies, there's probably 50, 60 people in the class. And at Boost VC, everyone like lives there. The office space is in a basement across the street from this building, Draper University, that the family owns, and actually run a small entrepreneurship school out of it. But they gave everyone a room at Draper University and kind of this office space across the street. So we just got super close with everyone that was in the tribe with us, talking about product and Bitcoin developments and who everyone else is talking to, and just like the network we made there immediately from all the other companies, everyone they knew. Adam and the Draper family have been in Silicon Valley for like 100+ years. They're so well connected to all the investors out there. They immediately made an introduction to us to Coinbase, which started our business partnership with them, which is like one of the most valuable things about our company right now. So yeah, we went there, and San Francisco is pretty obviously a tech-focused city, and that's when we were building the first iteration of our product. And a lot of what we did at Boost was literally just grind away at actually building our app and just making these first moves to the market. We made the whole thing at the Boost Accelerator and launched live. After that, we wanted to continue staying in San Francisco and kind of, using that network that we had created. So like I was talking about, we started working at out of the Coinbase office in San Francisco about once a week. Just met a ton of people, a bunch of new friends, business partners, people that had given us perspective on stuff, a bunch of people that have helped us get into media publications. I mean, it was just extremely helpful to have a network there. So, especially a young company that has a lot to really learn and just wants to make connections with people across different industries, accelerators are just so helpful. I mean, they gave us a little bit of money, a place to sleep, offers to introduce us to anyone in the Bay Area. It was like probably the best decision we could have made at that point. And then, so, after we had been launching the spare change program and running it for like 8 months and started deciding like, hey, let's try and kind of not pivot, but just, evolve our product how we, think we should. We heard about this other program, Startup Bootcamp FinTech, which is in New York, obviously a big finance city. But at that point, we kind of had our app out. we're starting to, think about moving away from spare change and starting to look at other apps like Robinhood, or even, look at firms like Fidelity and Thomson Reuters and just be like, this market data and research and just all these investment tools, this is all finance and business stuff. We have these tech connections from San Francisco. Let's go meet these investors and start talking to some of these firms. And the staff at Startup Bootcamp is extremely well connected to, banks and financial firms across the city. They've met, introduced us to a ton of players. Everyone in New York is, pretty open and helpful to working with us, and just having that introduction now from, an established accelerator throughout the world. Startup Bootcamp, for reference, is started in Europe and probably the biggest over there too. But now that they're coming to the US, they're really starting to make a mark. This program is sponsored by a ton of kind of big financial companies. They've made all those intros to us, kind of really been supportive on sort of this new product direction. And we've gotten a bunch of feedback from everyone in the city and really liking New York. So, I can only say positive things about accelerators. And I think some of the connections that they've introduced us to are going to, really pay off for Lawnmower and just our lives in general. So, only good things to say about those two and the whole accelerator concept in general. If you have a product idea and you're young and don't have a network, it's like support, money, time, resources, connections. It's all set up to help you, and I think it's a cool trend.
Awesome. Glad you enjoyed that. And we actually had Adam Draper from the Boost VC Accelerator on the podcast. So anyone who's interested in learning more, definitely scroll down and check out that other episode of our podcast at Bitcoin.com/podcast. So let's talk about what are the other assets that you're thinking about adding in other blockchain assets. You mentioned Ethereum or the DAO. Have you added those? Are these part of the launch that you're doing right now?
Yeah, so how we're kind of doing this, so we do feature a bunch of these other assets in our app. You can only actually invest with real money into Bitcoin. So kind of how we're set up is we use other exchanges and wallets kind of in the background for our users. So right now you can buy Bitcoin kind of using Coinbase wallet and hitting Coinbase for market orders. We're trying to make some relationships, and we've been talking to a bunch of other exchanges in the space that trade some of these other assets like your Ether, Ripple, Dash, Litecoin, XYZ. So that's kind of how we're planning on expanding into trading those, is kind of by having a bunch of other exchanges in the wallet in the background, and us being this nice front end UI on top with a bunch of analytics and research and reports. So right now you can trade Bitcoin with money, but we also feature all these other assets as you track the price over time. We have resources for all of them, like white papers and big like news pieces that these assets have been in. I've wrote a bunch of kind of research reports kind of in this equity research style, so you can learn a lot about each of these assets we feature. We have news, just analytics, this Lawnmower index I'm telling you about, which has like a minimum $50 million market cap to get into the index, and it rebalances every month. I think right now it has in it like Bitcoin, Ether, Ripple, Litecoin. I think Dash fell off a month or two ago. The DAO is in after it got above 50 million like 2 months ago, probably going to obviously fall out soon. And I think NEM just got in as well. So it's kind of cool to just watch how the composition of the index changes over time. And the price, for reference, we had it pegged to start at $100 of value on January 1st, 2015. And right now it's at something like $193. So the index is overall up like 93% in like a year and a half. That's mostly, probably 80% driven by Bitcoin, but it's cool to see these other assets kind of come in, and especially weighted by market cap, you can kind of see just how dominant, other assets are compared to the industry as a whole. So yeah, we're trying to expand and cover all the assets as, quick as we can. In the meantime, it's just trade Bitcoin, bunch of Bitcoin education and material. The other assets, same sort of education, information, ability to track and watch them over time. A bunch of them are included in this index, which you can watch, but sort of live trading of those is what we're kind of focused on as our next steps.
Nice. Yeah, I think indexes are kind of underappreciated, but they're extremely important for the development of a financial market. So I think building more indexes is like the critical key building block, right, to build other financial products, whether that's derivatives, right, or anything else. You have to have those indexes for smart contracts. If we had Timo on an episode recently from Crypto Facilities, Securities, they're working with the CME group for an official index that would be on like a stock exchange for Bitcoin. And like the one thing I've seen a lot of indexes, there are a lot of great indexes. There's like even Bitcoin average, if you want to look at kind of a weighted average type index. But what I would really like to see out of indexes, and this is just my my 2 cents, is if more indexes can start to cryptographically sign and timestamp so their data feeds, that would be great, because that would let smart contracts start to tap into those indexes and use them. So you can build a smart contract, futures contract or something like that, that has a source for a cryptographically signed index. I mean, even if you blockchained the index, so you're actually doing something on op return, right? So you have an address that maybe posts a daily index value on the Bitcoin blockchain with the this cryptographic. I mean, it would come from your private key, so it would be cryptographically signed with a timestamp and the value of the index in some op return field. Then smart contracts can tie into that with access to the blockchain, and they can build a futures contract or an options contract or a swap or anything like that based on that number. So great to have more indexes in the space. We really need that for all kinds of development. Any traditional financial institution needs reliable indexes, or they can't touch Bitcoin because they have to have a measuring stick for the value. And so that's really important to the phase we're at in Bitcoin.
I totally agree. I mean, if you look at traditional financial markets, I mean, most people know the Dow Jones and the S&P 500 and the NASDAQ, which are indexes. I mean, you can't look at all 500 stocks. You don't even know what all of them are. You need some sort of aggregated way to just be able to gauge, you know, overall how overall sectors are doing. And yeah, in the Bitcoin space, I mean, a lot of this, you know, how Bitcoin will become mainstream and mass market is just the more familiar it looks to everything else. So, you know, like you're saying, if we could have a Bitcoin index, or soon an index that, you know, tracks a bunch of other blockchain assets as well, and have that on, you know, Bloomberg next to gold and the S&P and bond indexes and stuff. I mean, that would be huge. And like you're saying, those implications for smart contracts, if, you know, price data starts to be reliably published into the blockchain, I mean, you're totally right. That's how a lot of these, you know, derivatives kind of contracts would need to be structured and make the most sense of, hey, obviously, you know, if we're doing a future, we need to be able to hit and know for sure what, you know, what this price is, so we can have the contract kind of execute in the future based off some reliable data. And yeah, I totally agree, man. That's definitely how the industry is going to evolve, and just got to do as much as we can to get there.
Yeah, like a futures contract right now, it has to involve counterparty risk, right? And you have to price that credit risk of the exchange you're trading on into your, you know, what you're willing to pay for the future. So, you know, if I was willing to pay X number of dollars premium for a future, well, I have to price in the credit risk of the exchange, because there's been so much counterparty risk issues with exchanges in this rapidly evolving Wild West space, and you have to price that into what you're willing to pay for these futures, right? So if there was a smart contract that could be as simple as a few lines, it could be run on rootstock. It would have access to the daily transactions that have the time-stamped price, and it would just need to check once a day, and the smart contract would automatically make sure that the maintenance margin for both, you know, users in the multi-sig account was correct, and in the event of a margin event, it could provide, you know, a closure to the trade, and that would really evolve the whole stability of the price to have more, you know, derivatives, and perhaps it would evolve, right? That's a speculatory statement, perhaps, but, you know, derivatives can have some wildly out of control effects on price as well when you have short squeezes or anything like that. But definitely a big part of seeing this get to the next level. So let's talk about the market and the price. We're trading right around a $10 billion market cap right now, which in the big scheme of things is super small. We're talking about gold being 9 trillion. So gold is approximately 1,000 times larger in terms of market cap. We're catching up to silver, though. Silver's sitting around 15, maybe 15, 16 billion. So we're catching up to to silver. Silver's a very small market. What do you think of the market cap and the market in general? And coming up to the halving, we're going to see the stock to flow ratio get cut back. We're going to see the production of new Bitcoins cut overnight by 50%. And as we're recording this, actually, we're only 20 hours, 19 hours actually away from the halving of the block reward, the second halving in Bitcoin's history. Tell us what impact you think this might have over the next year or so in the Bitcoin market.
Yeah, actually, last night in New York, DCG threw a Bitcoin halving event and actually gave a talk just looking at some data of kind of then and now. And it's pretty crazy to look at really how the industry's developed. The 10 billion market cap right now, I loved when we went back into the double digits. That was just optically huge for me, at least. Like you're saying, gold is still 7 trillion, which is commonly compared to, and we're only at 10 basis points of that, which is wild. Another data point that I was looking at, which was really cool to me, was just the S&P 500, one of the most regarded equity indexes. Really, if you look at what's the market cap of the smallest ones on there, there's some companies at the bottom, number 500 and 499, that have like $3-4 billion market caps. So I mean, Bitcoin is bigger than probably 100 of the companies listed on the S&P 500. That to me was just like, wow, that's pretty dang cool. But in the past 3.5 years, actually, since the last halving, part of what I was talking about was blocks have actually kind of sped up and been a lot faster than we thought. With the first block being found on like January 3rd, 2009, I think that the first halving was supposed to occur on like something like December 31st. 2012. We actually got there in like November 28th, so like 31 days early. This second halving event wasn't supposed to occur until December 2016 as well. And as we're obviously like 5 months early, it's just because blocks were actually found at about 9 minutes a block since the last one. So kind of interesting that we're here quicker than expected. More supplies out. Right now, I think the second halving marks the point where 75% of the 21 million Bitcoins will have ever been mined. I was looking at some other data, and as we approached the first halving at the end of 2012, there was data for like 3 publicly recorded venture deals in the space at all, kind of the first Bitcoin VC deals. One of which was Coinbase's like 600K seed. The other one was Charlie Shrem's BitInstant seed, which was like $1.5 million. Since then, I think there's 200 deals on the source I was looking at from CoinDesk. Total investment was $10. A few other data points that I looked at were like daily transactions on the network went from something like 10,000 to like 250,000. I'm trying to think what else I looked at. Last time on the first halving, the price was about $12, and that was sort of right before the run up to 200 and crashed back down. And then shortly after that, we saw the infamous spike all the way above 1,000. That was followed by this sort of 1.5 year downturn to about 200, where we actually like launched our app at. And now the past 1.5 years, it's been kind of slowly going upwards. In the past 8 months, it's interesting to see trading volume globally is way up. And it's actually like 90% of it recently is in China, all on like OKCoin and Huobi. And I think BTC China in third. But I mean, the exchange volume on those are absolutely dominating anything in the US. Sort of this halving as well. I think I looked at one data point of, at 10 minutes a block, there's about 144 blocks found every day. Right now with a block reward at 25, I think it's like 3,600 new Bitcoin are coming into the system, which is going down to 1,800. With Bitcoin at like 600 and something, that represents like $1.2 million a day. That's no longer flowing from block rewards to miners, and some of which is going on to open exchanges. So it's just a totally different space now. So much has been done and built. All these other assets were kind of created. Ethereum wasn't even around, which has been in the news like crazy lately. There kind of was no alternatives. Litecoin was around, which did slightly faster blocks, slightly different hashing algorithm, 4 times the supply, but pretty similar structure. And now there's just, the ecosystem is just so much more evolved and diverse, and yeah, just growing like crazy. So it's going to be really interesting to see. One point I did bring up was like, really people saying around these halving events, like, is the price going to skyrocket because of the halving? I wanted to just bring up like, the whole efficient market hypothesis, traditional finance theory of, hey, if this information is known by everyone on the market, why, this should kind of be priced in. What would really cause a run up right before, the halving if everyone already knows about it, and if it would be new demand because of, like, really, where would that buying and increase in price come from? Really, it's just kind of interesting. I don't know if the thought would be existing users are going to put more in, or somehow new market participants are going to come in. But yeah, really exciting to see. I don't really have a prediction. Obviously, the mining ecosystem is going to change a bit. I think KNC Miner went out of business a few months ago, just saying like, hey, our expenses are, we're only making whatever profit margin, and after the halving, our revenues are essentially slashed in half, and we just can't sustain business anymore. So it'll be interesting to see how that sort of, the mining side of it, shifts, and really what kind of miners stay around. But as far as the price, I'd like to think it's slowly going to continue to go up as just it gets more mainstream and more people hear about it. But I'm not sure how significant the halving is going to be on the price. I'd be interested to hear your thoughts as well.
Yeah, and, like you mentioned, the efficient market hypothesis, I don't think it really captures the essence of how the markets are working. As I don't really subscribe to the efficient market hypothesis that much. I mean, if it was truly efficient, then they would have been priced in from the time that Satoshi programmed in the code to schedule the halvings, and we would have to think that people are pricing in the halving in 30 years. But people don't price things in until the future, and every day that Bitcoin lives, it establishes itself as more trusted, more having more history, and having withstood another day of attacks. Right now, Bitcoin miners are earning about $2.3 million a day at current prices, $2.4 million per day. That's 3,600 coins per day, and that's going to get cut in half. Now, on the volume side, you mentioned some of the exchanges like OKCoin and some of those, and I don't know how to use that data as a proxy for real interest in Bitcoin, because it's so many traders and there's a lot of bots and stuff. But even looking at like local Bitcoins, you can see how much organic growth there is on those charts, which is really exciting to see the growth, especially in certain countries right now that are having currency pressure. You've got Venezuela and Kenya and Russia that are just going through the roof right now at local Bitcoins, doubling and tripling their past numbers and setting new all-time highs every week or two, every couple weeks recently. So really exciting things to see in some countries. The halving is kind of the opposite of the typical pattern in fiat currency, which is the doubling of the printing rate, the doubling of the inflation rate. So Bitcoin is more the Austrian approach, where we say, no, not go away Keynesians. We're going to have a finite monetary system. And this gets back to kind of a understanding of sound money, and what makes money sound is that it's limited. And I think that if it wasn't for the halving, or the halving is kind of an inside joke, it's actually the halving is the correct term. But if it wasn't for the halvings, I think people wouldn't quite appreciate or realize, it's a good reminder every 4 years that Bitcoin is limited. And that's really, I think, why we're all here. If Bitcoin wasn't limited, a lot of us wouldn't be interested, which is, why a lot of us aren't so interested in fiat currency, because of those doublings, as I like to say. In Venezuela, inflation is 1,000% or so, 800% this year. So, you're trying to get out of your Venezuelan currencies as quickly as possible and into something that has a finite supply. And really, getting back to the Austrian economics, this limited supply money theory gets right down to the fact that, money needs to be a store of value. It needs to be something that, mimics time, or it's something that we can invest in over time, that we can trade time for. Time is like the ultimate scarce resource, right? And so, if you're going to trade your time to invest in something, you want that to be scarce as well. You definitely don't want somebody down the street to have a printing press for it. And so there are miners, but this halving is a great reminder that, the mining is just the distribution. It's just the way that Satoshi had to invent a way to distribute the 21 million coins in a somewhat fair way, and as fair as you can get. If you have currency and you need to give away 21 million coins, how do you do that without some ID requirement? Everyone has to show you ID and they get a certain number of coins, and you can't pull that off in a distributed system. So the mining thing is really the whole solution to how you give away coins to the world. And obviously people are going to compete for those now, because there's a $10 billion market, and there's demand, and there's and supply and demand is really what drives the price. It's a free market value. And so it's great that we have these 4-year reminders of the real economic theory that is behind Bitcoin, and how that differs from the rest of global fiat economics.
I totally agree. The scarce resources just a great selling point and nice to bring up, and really helps drive home that gold comparison. Although, I'm still not convinced that there's not just some random, stash of gold somewhere in the earth that we haven't uncovered yet. And then that whole, fixed supply thing is kind of like, tell me the supply then. Yeah, no one really knows, in my opinion. It also helps you compare it to like real estate. Like, hey, that's, real estate's one of the most attractive assets on earth. It's like, hey, I know I forever own a piece of this land. That's not going anywhere. So like in Bitcoin, me and some of my buddies since day one were always like, I want 21 Bitcoin. I want to be one in a million, no matter what. I'm gonna have 1 millionth of this network, especially as other people lose private keys and stuff. That's just gonna increase my share. One thing I also wanted to kind of bring up and talk about briefly is right after I gave my talk last night, some guy came up to me and he's like, hey, obviously the block reward seems to get, cut pretty quickly. It goes under 1 Bitcoin and, not too many happenings away. Soon it gets down to really low decimal points. And at that point, miners are going to rely off of the transaction fee market. And, part of Bitcoin's other selling point is like, hey, it's nearly free. It's pretty cheap to send Bitcoin across the world. And it's like, once in the future, when block rewards are down and miners have to rely on transaction fees, that kind of, moves in the opposite direction a little bit of this, totally cheap, free system. So just kind of interesting, and something that'll be interesting to watch develop sort of the transaction fee market as well as we move towards these lower block rewards.
Exactly. And on the note of scarcity, I saw a cool site, bitcoinsperperson.com, and it just does the math to divide the number of Bitcoins that are currently out there, which is 15.7 million Bitcoins by the 7.3 billion people on the planet. The total Bitcoins per person on the planet right now is only 0.002 Bitcoins. So there's only like $1.50 worth of Bitcoins for every person on the planet. And so this gets back to, your spare chains, right? If you do spare change or recurring buy for, a couple dollars a month, you're going to own a substantial amount of this asset. If you put $10 or $20 a month into this, you're going to be in 5 or 10 years. If this catches on, right? So Satoshi famously said, it might make sense to get some Bitcoins if it catches on. Well, it's catching on. When he said that in 2010 or 2009 or whatever it was, it really hadn't caught on. It was like just the idea. It might make sense to get some of this. And if you bought $10 of it back then, it'd be worth probably $100,000 or something crazy like that right now. That's crazy. And that's kind of even my thing too, is it's just overall diversification of your overall portfolio to get some Bitcoin. And even sort of within crypto, I'm like thinking like, hey, Bitcoin's amazing, but it's not the only new asset and technology out there. Like, I want to own a little bit of Ether too. This sort of supply 21 million with decreasing block rewards over time. That's just Bitcoins. Something like Ripple, they decided to just pop, 100 billion XRPs into existence right off the get-go. Ethereum's supply model was based on a crowd sale, and now some small block rewards, and they might shift to proof of stake, which would just completely change the game. It's like, there's all these different assets and mechanisms, and there's a lot going on. And, just sort of buying a small little pieces over time of assets you're really bullish on as an overall diversification play is kind of my move, and totally not, in any sort of very short-term day trader style capacity. I don't have the sort of mental bandwidth to sit there and just watch, huge candle bar charts every day. It's like, give me an overall overview. Let me do some research, decide if I like this long term, and then I'll slowly kind of passively go in and, only watch the price so often. Because, sometimes if I don't continue to tell myself that, like, hey, I'm long the technology, relax, I'll just be sitting on my like CoinCap app 24/7, just refreshing the page over and over and be like, oh shit, a cent. Oh God. Yeah. And, it's hard to pick the winners, right? You can't really, there's 1,000 altcoins. And so you get this weird thing where anybody can create a copy of any of the altcoins. And so I think really network effects are going to be a big part of which altcoins end up winning, if any. But I think Bitcoin's going to stay dominant. It's my opinion. You look at how established it is and how much traction it has, and it's known as the cryptocurrency. And it would just be so hard for any altcoin to come out with a selling point that kind of gives it a major move up on Bitcoin. You see some currencies that run up to $1 billion market cap, and a lot of them pull back under that. Ethereum is interesting, but now Rootstock and Counterparty give you the same features and they do that on the Bitcoin blockchain. So I don't know long term. I'm on the fence on that. If there's room for a cryptocurrency that, can survive 10 years as an altcoin, we'll see. But that's the fun part of the game. And so, yeah, dollar cost averaging a little bit here, a little bit there is definitely a low risk way to experiment with this, and definitely a fun thing to do. Again, getting back to this Bitcoins per person, I'm just looking at this here. If Bitcoins were distributed using the current global distribution of wealth, 99.9% of people would only have 20 cents or 27 cents worth of Bitcoin. And the top 0.001% of people would have 0.64 Bitcoins each. And so, just gives you an idea of, the global wealth distribution, and also how scarce these Bitcoins are, because people don't realize that 21 million is a really, really small number in the big scheme of things.
And on top of that, there's for sure at least decent percent of those 21 million Bitcoin that will never be moved again because people lost those private keys. I mean, no one even knows if Satoshi actually still can even move those original coins at all. It's just totally up in the air. When you're looking at, like that 21 out of 21 million to 1 in a million thing, it's really like, the 21 million number is just going to kind of decrease of total Bitcoin that anyone can actually move. So it's even scarcer than just the 21 million distribution, as it's really easy to lose a private key and you're totally screwed.
I know people who have. I know people who lost their wallets. So for those of you who are just getting into Bitcoin, be very, very careful not to lose your Bitcoin private keys. There's no password reset feature in Bitcoin. Once you've lost them, they're gone. And there's probably a few million Bitcoins. Out of the 15.7 million Bitcoins that exist, there's probably a few million of those that won't move again. And so we'll see, right? Satoshi might have 1 million coins, and we have no way to know that he's never moved them. So we don't know if he even has those private keys, although it's pretty likely Satoshi does. I don't know if the market's price that out or price that in. That gets back to the efficient market hypothesis, but it definitely would be fun to watch if he did move the coins. Thanks so much for coming on the podcast, and really looking forward to see Lawnmower develop. And actually, my interest in trying Lawnmower out kind of went up again, since it's more than the spare change. It's now like this recurring buy, dollar cost averaging thing. So I'm going to give it another shot and download your app again.
Absolutely. Yeah. Pleasure to be here. And totally check out our app. And we have a bunch of new sort of like research and this Lawnmower index. Totally redid our site, brand new app updates with brand new kind of UI and a bunch of features. Yeah, really let us know what you think. I mean, we love to hear feedback from users in the community on, what we could do doing better, any ways to improve in the future. And thanks again for letting me be on here, man.
Cool. Talk to you soon. And again, for those who are listening, this is the Bitcoin.com podcast. You can go to Bitcoin.com/podcast to see more episodes. We've done some other episodes with Boost VC, which is the accelerator that Lawnmower came through. So once again, thanks so much, Alex, for coming on the show, and you have a great day.
Thank you. You too.
Blockchain.